Hello, you are tuning in to Awani Review with me, Cynthia Ng. Today we will be delving into the world of Artem Ventures. It is a local venture capital focused on early stage funding. Now, joining me today is one of the managing partners of Artem Ventures. I have with me Zhen Hui, or better known as Zhen.
Hello.
Thank you so much for having me at
Thank you for having me.
working space.
Yeah.
We are here to talk about the landscape of investment, particularly early investment. But before we get to that, let's get to know you a bit better. I know your partner, Saikid, is not here with us at the moment, but maybe talk about Artem Ventures. How did you both come together to start Artem Ventures? And why focus on early stage funding?
So I think it comes from a history of working together. So Saikid and I, I was actually employee number 3 at a previous fund with him. A fund that he set up. It was a corporate venture capital arm of a Singapore-listed company, right? And when we were there, we were looking at regional investments in early-stage companies, mainly digital technology. I think those were the early days of some of the startups that were popping up doing e-commerce, doing fintech, logistics, things like that across the region. So he and I, we made a few investments along the way through that fund, 18 investments, I think, at last count. And over time, I think, we went through an entire fund cycle with that fund, 8 years and all that. So coming into the 2020s, we set up Artem Ventures. It's a completely new and separate outfit, and we started investing in early stage companies under a fund that's backed by FWD Group. So that's our first fund.
So 2020, that was what, in the middle of the pandemic?
Pretty much.
What was the conversation there? What opportunities did you even see at that time?
At that time, I think, we have gone through a period where we realized that investments were, getting a bit risky at that time because we're seeing a lot of startup failures. Mm-hmm. And we decided that, okay, it's time to rethink and see if there's a way to tackle a new market, possibly. And we wanted to bring along, that expertise that we had previously, because we work with a corporate, right? And it's a listed corporate, and they have so many requirements. I dealt with auditors from large audit firms. I dealt with Big Four parties and all that. So in a sense, we had gotten very familiar with very high standards of governance, especially when it comes to VC funds. At the same time, I think we never lost sight of the fact that we were able to operate and deploy funds very quickly, because I think we had a good eye for spotting some good investments. And some of the companies you may have heard of, we invested in Kerlek back in the day before it was acquired by Razorpay, right? So a Malaysian homegrown success. So we wanted to take that experience and that specifically that fintech experience with us, and then we went into Artem Ventures, mainly to back early stage fintech companies, especially those that are trying to address issues like financial inclusion.
Okay, so why early stage particularly?
I think with the fund that we have on hand, our ringgit probably does a lot more work when we deploy it into early stage companies, right? And I think secondly, it's out of I would say a familiarity with the struggles that early stage founders go through. Many of them come in with, founders have strong skill sets, but ultimately each of them, could do with some improvement in areas like product development, business development, data, how they look at data, store data, that sort of thing. So we use that familiarity that we had over almost a decade of working with early stage companies, and we wanted to bring that with us, because that's also where the opportunity lay, right? We saw that the market, over time, 8 years has pretty much gone by, and some of the early stage companies have became later stage companies, right? So along the way, VCs also move along with their startups. So more and more funds came up, I think towards the late 2010s, looking at Series A, B, and onwards, growth stage funds, right? So that left a bit of a gap in the early stage market, and we thought that we could be the ones that address this gap, hence this fund's focus.
Well, let's talk about the year that you've had, 2023. Understand that Artem backed 12 local companies. If I can name a few, Keto Care, of course, is an on-demand babysitting platform. Quirk, platform for gig workers.
Yes.
And you also have Do It, Islamic FinTech, and MadCash focusing on microfinancing. So it's quite a diverse range. Could you talk to us about the selection process? What stands out to you when you look into investing in the company?
It goes to our fund thesis, right? We're looking again at FinTech and InsurTech and there's something that drives an underlying need for bringing insurance and financial products to underserved communities. So if you really look at these companies, they're serving gig workers, they're serving SMEs, they're serving people who lack that kind of a safety net. So we're looking for platforms that are helping to address these very real problems faced by these underserved communities. And we wanted to basically come in and say that, okay, we could be that partner, especially with our P FWD group, right? They could be an insurance partner for many of these platforms. We want to bring them to banking partners. We want them to work with each other. Some of these startups have the product, some of them have the market, and then they could work together and bring financial inclusion to all these communities that are sometimes out of reach, of the traditional systems that we already have.
Okay. Well, so that's the market that you are focusing in. But what about, in terms of perspective as a venture capitalist, what about qualities of founders? Of course, that plays a big factor into it as well. Walk us through what goes into your thought process.
I think for us, it's really simple. It's looking for founders who are very resilient, who are very adaptable and coachable. So we want founders who are visionaries, but at the same time, really good at executing what they do. We want founders who are very aware of the impact that they're creating for their companies. Like, I can talk to the founder of Senang Insurance, one of our investees, and he knows, when accidents can occur, where accidents can occur, and he knows who's at risk, his customers. And last year they sold like 750,000 insurance products, right? So we want founders to be very aware of the people that they're actually serving. Because with data, and these are digital platforms, right? So they're sitting on so much data, and that sort of data actually helps them to create new products, create new services that can actually address some of the issues that their customers are facing.
Okay, so 2023, 12 companies, 2024, how's it looking like? What's exciting to you?
Well, we're looking at probably doing 10 companies at least this year, or even in the first half.
Specific areas that you're looking at?
Specific areas, I guess it's more of a continuation of what we've been doing, right? I think just to add maybe one layer to what we were talking about previously, right? If you look at some of the companies like GX Bank, you look at some of the digibanks basically, they didn't start off as digibanks or fintechs, right? They started off as platforms. They were trying to solve problems relating to transportation, retail, that sort of thing. So later on, as they accumulated users, accumulated data, that's when they layered fintech on top of things. And we're kind of seeing that same possibility play out with some of our companies, right? Kiddo Care today, maybe they're helping their caregivers find jobs, and I think last year they helped them find like 40,000 caregiving jobs, So this is just going to increase as time goes by, but beyond that, so much data about these caregivers. You know how much money they're making from their jobs. You can, in a way, you're their sort of, you understand where they need to go next, right? In terms of more like a financial uplifting and that sort of thing. So that's really where we want to find companies with this kind of market that they're addressing. But at the same time, we are looking for companies that are hopefully doing something with data, with innovative products, right? We're looking at InsurTech, for instance, and we want to see.
You talk to us about the partnership with, was it P
FWD?
FWD, which is a Hong Kong-based insurance company. And how did it came about? And I understand 45 million in funding they're looking at. How are you going to disperse them? Like, what are you looking at?
So, how that partnership really came about was, I think we shared a vision to further develop the Malaysian startup ecosystem. I think we want to tackle 3 areas, right? The discovery of innovative technologies. We wanted to create more job opportunities, and also bring financial and insurance products and services to segments that are unprotected. So they wanted to make a play for the Malaysian market, and we being a homegrown VC, I think we were in a pretty good place to work with them. But working with an insurance company, it's not always the easiest relationship, because they're kind of sticklers about rules and regulations, conservative. So we wanted to honor, we wanted to respect that, right? And it goes back to me and Saiki, we had this experience with CVC and all that. So we understand, right? We need to be very stringent in our governance, but at the same time, move fast, act fast, and invest in startups very aggressively. So you say 45 million, we're actually hoping to deploy all the investable capital that we can by the end of this year.
Okay.
So a pretty aggressive target. We've given ourselves 2 years to do it. And I think the market itself is actually quite positive. We're looking at probably close to maybe a dozen deals at this time. So there's no shortage of startups to back. It's just a matter of executing it.
Okay. Now you mentioned the market seems quite positive, but
Yeah.
you know, if you look at when you talk about the funding scene, it does seem a bit tight, particularly in the past 1 year or so. A lot of companies are scaling back investments. If I can pull up a data by Deal Street Asia, it says like about 58% deep in venture capital fund in just this was in second quarter of 2023. Can you shed some light about the situation in Malaysia? What's the story here? Are you also seeing a down cycle here, or do you feel like pretty optimistic about what's ahead?
On one hand, I think we're okay. I think we're getting a lot of deals. Of course, back in the day, I think we had a lot more investment activities going on in Malaysia. But at the same time, it's not all doom and gloom.
Okay.
We've been seeing, last year alone, EPF, Corp, Khazanah, so many of these gigs and all that, they are actually channeling a lot of funds into the ecosystem. And they're getting fund managers. And right now, I think there's a lot of capital around. And it's more of, in line with the existing climate. I think VCs aren't exactly holding on to capital. It's more of just taking a more conservative approach to investing. We want to spend a bit more time to really understand businesses and make sure that there's legs to it before we deploy. I think that involves a lot more. What do you call it? It's not really like a deep dive kind of thing, but it's also getting to know founders a bit better, even from the beginning. I can give an example from what we're doing, right? Even before we invest, we actually, maybe it's not a good idea because there's a lot of resources involved, but we're actually taking the effort to coach founders on certain things like corporate structuring, financial engineering, tidying up some of their internal processes, things like that, before we even cut them a check. Because we like the business and we like the founders, but we want to make sure that when the money goes in, they're ready to scale, rather than put the money in and then there's a lot of things that they need to fix in their house, right? So we're taking a bit more time on that front, and I guess many VCs are actually slowly starting to look at that as well, which could explain why there's a bit more, it's a bit slower in terms of the actual deployment.
What are your thoughts then when it comes to valuation and expectations? How should entrepreneurs be thinking about it? What should they be expecting in this climate?
I think they should probably be expecting lower prices, I guess.
So we came out from a high like 2021
Yes.
post-pandemic, and what is it now? How is it looking?
2022 was like the peak, and then 2023 we started seeing them come down.
Yes.
So it's not so much that we want to impose down rounds on startups, or we want them to come up with low prices. It's more of having a realistic view of where your business is going to go, right? Because right now I think the growth at all cost model has gone out the window.
Yeah.
Everyone's focused on profitability and surviving. So I think that founders need to really pay closer attention to how their money is going to be spent, at least for the next 18 months, 24 months, using it for a longer tail kind of thing. But don't chase vanity metrics. Don't chase growth for the sake of growth, just to prop up your valuation. I think ultimately the valuations being adjusted actually reflects how VCs are starting to pay attention to certain drivers, we're looking past transaction, we're looking past GMV, we're looking at real revenue, right? So that's really one of the core, I think, factors for this sort of a valuation change mindset when it comes to valuation.
But when you talk about funding, then what startups do you think will continue to get funding, and where will funding dry out in terms of verticals and markets? What are you seeing?
I think it's probably going to be a general view about it. It's going to be startups that are actually solving real problems.
Okay.
I think it's no longer enough to have a cool product, right? That doesn't have customers, right? Back in the day, yeah, sure, somebody could put money into something just because they like the look of it, but I think these days products have to be solving a problem out there, have to be addressing some need in the market. So having founders who have a good view of who their customers are and being able to think 5 years ahead, right? So your product today is not going to be the same product. It is going to be 5 years later. It's going to probably become. I always encourage founders to think of an ecosystem, right? Today you're this, but you want to address so many different things, different verticals, and different sectors, different customers, in fact. But you need more products to do it. So the companies that can achieve this, that have this vision and are able to do it, will continue to get funding. The ones that are building products just because people are doing it somewhere else in the world, they're going to struggle.
Yeah. Okay. Well, we talked about the funding part, but what about end of funnel exit opportunities? I know you have just started investing maybe in the last 1 year plus, but it's evident given the conditions in the private and public markets, it will take a longer time to exit. And how will that impact your investment perspective when it comes to selecting companies?
So I think it's a goal that we want founders to constantly keep their minds on, right? You have to exit someday.
Yeah.
You're not just building a business and 20 years later, this is your family legacy. We're in this business to make money, but we're not telling founders to do it on their own. So we are very hands-on in the sense that we want to work with founders, on making sure they pick the right strategies. They're doing making all the right steps along the way towards that eventual goal of exiting, right? So I think what we've seen works in the market is it's kind of a continuation of what I said previously, right? If you're just doing something today that's you're doing one product and it's like maybe it's an e-commerce product or something like that, and you're serving this small market, limited market, you're probably not going to get an exciting exit. So where you really need to think about next is, okay, how do you evolve this? How do you add more layers to your product? How do you go deeper into what your customers really need? And how do you go outside of Malaysia as well, right? So many of them get trapped here.
Yeah, that's the question that I wanted to ask you. So if you look at some of the success stories, of course, Grab, Carson, they are now regional companies. And I think that tends to happen to local companies, which is you get to a point where you struggle to get out of the Malaysian market. Do you think it's more due to funding, or is it due to support, or what is it that's lacking, that the gap?
I think it's probably a combination of factors, in the sense that some of our founders in the Malaysian ecosystem have the mindset that Malaysia is a market that's big enough for them. So they're in the Klang Valley or something, and then they expand into a couple of other densely populated cities, maybe Penang or somewhere, and then they think that that's enough for them. And if that's their objective, that's fine. If that's where they really want to go. But once you take money from a VC, you can't really settle on just being there, right? You have to think very big and think about outside of Malaysia. But when you want to go out of Malaysia, that's where you really need the capital to scale. But at the same time, while we have a lot of funding still in the Malaysian market, the story has to make sense. Like, if I'm raising $10 million to scale across Southeast Asia, I need investors that believe that I can execute it, right? So then some of these investors are probably going to be regional investors, people who have seen this sort of model. They understand this model and that it works, or if it doesn't work, what are the issues? And also you want that sort of support, right, from these sort of investors to take you out of the country as well. But sometimes, if you don't have enough traction, or if you haven't thought about your business plan or your expansion plan deep enough, these investors aren't going to bite. So then you have a bit of a chicken and egg situation, right?
Yeah. So I'm quite curious, when you meet a founder, are these the things that you want them to be thinking about already from the day one?
Absolutely. Even day one itself, first meeting itself, I would ask the founder, what's your exit plan? Right? So then the good founders are the ones that have actually thought about it. So I'm not asking them to tell me that, we're going to go on an IPO, we're going to go through a trade sale. I mean, sure, but how do you get there? What kind of company are you building that's going to get there, right? So the good founders are the ones who have thought about their fundraising plan across the years, who know exactly how much money they need to reach that point, and they know who they should be courting from today. Good founders already have exit conversations even after they, having just started their business for a year. They've already started building those relationships that are going to get them that exit one day.
Okay. I want to to go back to what you said earlier about you, Artem, having a more hands-on approach.
Yes.
And what does that look like? What does that entail? How do you handhold them? And what goes on day to day with you and the founders?
So no hand-holding of any sort. I mean, I don't have time for that either, right? So there are a few things that we do, right? It's really, in a sense of getting down into the trenches with them, it's to understand who their customers are, what their problems are. I'll give you an example. I've actually attended one of Keto Care's training sessions for their caregivers.
Okay.
It was super exciting. You know, it was in a big hall, and then everyone was very energetic and passionate. All the ladies who have applied to be caregivers, listening to the training and all. So I love the atmosphere. I've spoken to other customers of other platforms as well, Agent to You. I've spoken to a reseller, you know, on their platform, talking about selling their business. I think doing aromatic oils, things like that. We have heard stories about, so anyway, it's like we understand those things, and where we really step in would be like, I give you again another example, right? Towards the end of last year, we asked our startups to start thinking about their business plans for 2024. So that's really when we step in and say, okay, you have your roadmap planned out for the year. How do we add value as an investor, right? What kind of connections do you need? I'm going to give you feedback. I don't think this works. I think that works. I think you should pursue this. So we're helping them to find that focus or keep focus on the areas that they need to work on and overcome some of the shortcomings as well.
And also a bit of structure, I suppose.
Structure, exactly. So a lot of startups, you know, they have a lot of ideas and stuff like that, but it's really picking out the right ones to focus on, again, towards an exit. Right? So in a sense of being hands-on, it's more of a strategic advisor kind of role, making the right connections, but at the same time, Artem is last year we did a few programs. We did, if you go onto our website, you'll probably see them. It's .connect, we call them .esg, .grow, right? And these programs are capacity building programs, networking programs. We're trying to help our founders, you know, come to a workshop for branding, for instance, or business planning, and then we'll bring an expert or a consultant or a coach, and then they'll be able to help our startups frame, you know, the problems that they already have, try to solve it. So these are the sort of value creation activities that we want to do for our portfolio companies, you know, outside of just the usual mentorship and things like that. You know.
Okay, well, that sounds all right. Fascinating. I do want to ask you something about, you know, when it comes to geographical availability of talent and funding, it tends to be in the cities, right? But I did read somewhere that Artem is also looking into, you know, venturing out a bit and trying to get startups outside of the ecosystem. Talk to us a bit about that.
In a sense, yes, not directly perhaps, but it goes back to the companies that we're trying to back. I'm just going to give you an example again, MadCash, right? So they offer microloans to women entrepreneurs, and these entrepreneurs tend to be in rural areas, villages, towns, and really for us, you know, what really attracted us to MadCash was, it's not like the proverbial, you know, giving a fish to a man and expecting him to survive the rest of his life, right? So MadCash, other than financial assistance, they also have programs for business upskilling, financial management skills, that sort of thing. So I think one thing that really encouraged us was actually seeing the testimonies that come in. They have an ambassador, I think, called Irene. Apparently she was like a part-time farmer, you know, just earning enough to support herself. And then she went through their program, she got a loan from them, I think way back in 2020, and you know, she eventually grew her community of collaborators to I think 70 people. And then she's serving like 25 hotels, you know, delivering herbs to them last year. So MadCash, you know, that's just one microloan, one program participant, but they've disbursed like 337K ringgit in microloans. I think they've onboarded 367 women through their programs. So that's a lot of impact that's being created in all these areas. So we are always looking for startups that have this reach, right? Don't tell me you're doing financial inclusion, but you're situated just in the Klang Valley, you know? So that's really
How do you go about looking out for them? Like, where do you go to search for this?
I think
gems, the startups?
These gems, it can be a bit tricky sometimes, I guess, because you still need the founders to be present, right? At least being part of the ecosystem. And Aiza from MadCash, for instance, is a very public, very visible person. I guess it's just us spending a little bit more time as well outside of our comfort zone. So we have actually made trips to Penang, for instance, because there's a very strong like local entrepreneurship community over there. Some of them have the network that we don't, and we have it. And then I think it's just about working with everybody to sort of bring up the ecosystem together and expand our collective reach, so to speak.
Well, speaking about bringing up the ecosystem, of course, the government, I think last year, the economy ministry has said that they really want to streamline and also reform the startup system, focusing in early stage. How do you interpret that message? And I wonder, from your perspective, where are the areas that need most help?
I think when it comes to early stage companies, I'm going to say it right, a lot of them aren't exactly very well rounded. I mean, they're okay to some extent. They have a solid skill sets in certain areas, but they tend to be lacking in others. So for us, it's really coming in and saying, okay, we see the problems that you have, and we want to help you solve them, right? So either it's in the form of programs that we have partners for. We can bring in experts. We have, for instance, brought in a tech consultant to do like an tech infrastructure review of one of our startups, just to identify where the gaps are, just identify the skill sets that are missing to really operate it well. And that's us doing it on a micro level, I guess. I think beyond that, of course, funding for early stage startups are very important. I think I'm very encouraged by the fact that there's a lot of funding coming in through EC funds as well. We wanted to do a little bit more, right? Funding is one thing, value creation is very important as well. But even among ourselves, the partners, we actually volunteer our time, spend our time as coaches, mentors, and advisors outside of the startups that we already have. So we're working with various programs out there, accelerators, things like that, just to give a little back to the ecosystem while we can.
All right. Just one final question to you, Zhen. What is looking exciting to you for this next few years?
What really excites me is discovering a new talent, new founders, new businesses that are actually doing something, creating a lot of impact right now we're doing fintech, doing insurtech, but we want to look at other sectors that are sort of like that could help, that need help. For instance, food security, energy, climate, this sort of thing. So we want to invest in agri-tech, we want to invest in climate tech, stuff like that, cybersecurity, pressing issues, right? So that's really us. I think it's more than just creating funds and trying to make financial returns, but how do we make our money achieve a lot more in terms of the impact that it's bringing back to the world.
All right. Well, thank you so much, Zhen, for sharing Artem's mission and also your insights as well. Thank you for having me.
Thank you.